This program is brought to you by realestate.com.au. Keep moving with Australia's #1 address in property.
Welcome back to the program. A big week for auctions this week. Nationally, we'll see 3,165 auctions. Sydney will be holding 1,039 of those. Over in Melbourne, there will be slightly more, 1,427 auctions. In Brisbane, we'll see 133 auctions. Adelaide will hold 139. Perth will have 9 auctions, and Canberra will hold 88 auctions. And taking a look now at some of the most viewed properties across Australia this week, kicking it off in New South Wales at 57 Station Street, Newtown. It's a 3-bedroom, 2-bathroom terrace with original fireplaces, high ceilings, bit of room there for a cosmetic update too. And the price guide for this one is $1.1 million, being quite central. Over in Victoria, we have 1 to 3 Sackville Street, Kew. It's a huge Victorian residence on almost 2,500 square metres. It's got 4 bedrooms and has been partially restored. Out the back, there's a swimming pool, courtyard, and also room for a tennis court. Yeah, you need about $10.5 to $11.5 million to secure this one, because that is the price guide. At 134 Valley Drive, Doonan in Queensland, another huge property on over 7,500 squares, named Blackwood. It's a resort-style home, winner of the HIA Home of the Year. It's got a 21-metre pool, 5 ensuite bedrooms. It's a pretty large one, that one. And 11 Bruce Avenue in Mitchell Park, South Australia, is a 3-bedroom, 2-bathroom house on 330 squares. It has renovated interiors, an outdoor covered area with an established garden, and it's got a price guide of $695,000. And over in the Northern Territory at 4 Castlemaine Close, Bayview, is a 5-bedroom house on 1,200 squares. It's got exclusive marina front position and lush landscape grounds, making it particularly inviting. And it has a price guide of $1.7 million. And the top listing of the week is at 16 Baldwin Road, Canterbury in Victoria. It is an absolute stunner of property on 6,500 squares. Check this one out. It's got 10 bedrooms, 11 bathrooms, and of course, space for 10 cars in case you need that. It is built in 1863, and you can see the gorgeous traditional interiors, but the wraparound grand balconies combined with manicured gardens, an indoor pool, floodlit tennis court, basically anything you could want. Almost looks like it should be in Lake Como, that one. You'll need a bit of cash to buy it. Its price guide is $31 to $34 million. Well, building approvals took a surprise dip, missing expectations, down 5.7% for April. It comes off the back of a relatively strong selling season. Well, let's get more on the property market. I spoke with Eleanor Creagh, senior economist at REA Group, and started by asking her about the auctions market.
Yeah, certainly. I mean, we're closing out the autumn selling season relatively strongly. Of course, interest rates moving lower this year, certainly helping to underpin both buyer and seller confidence and driving renewed demand and price growth in the housing market. So we're seeing that auction volumes are sitting a little over 3,000 heading into this weekend. Now, that's around 12% higher than this same week last year. So we're seeing, I guess, a continued uplift in activity by a moderate amount.
And how much is that to do with what we're seeing with interest rates? Of course, a couple of rate cuts this year so far.
So we've certainly seen that February's rate cut really sparked a turnaround in housing market conditions. We had seen that home price growth was really slowing in the capital city markets, particularly towards the end of 2024. We have now seen that home price growth has reaccelerated, with price growth broadening across most of the capital city markets. And of course, Melbourne, which has been particularly soft for much of the past 4 years, seeing price growth reaccelerate also. Now with the interest rate cut, the additional interest rate cut we've seen in May, certainly we're expecting that is going to continue to improve buyer sentiment and buyer confidence, and likely the expectation of continued price rises in the months ahead continues to draw buyers off the sidelines and bring forward their purchase decisions.
Eleanor, it's interesting. We got that economic data, the building approvals number. I know it's quite a volatile economic data point, but it did fall by 5.7%. That was below expectations. What does this mean for what's going on in the market? What does it tell us?
Yeah, you're exactly right. So we've seen that the monthly trend for building approvals is, as you say, incredibly volatile, but we have seen that fall in the most recent data released from the Australian Bureau of Statistics today. However, we are still seeing that over the past year, the general trend in terms of where approvals is tracking is positive, and it is moving in the right direction. Although the overarching picture is still one of a chronic shortage of new homes and a chronic supply-demand imbalance. We're really not building enough or approving and then building enough new homes to meet pace with where demand currently is, and also to meet the federal government targets of 1 million new homes by 2029. So we really need to step up the pace of, one, approvals, which is really the best case scenario for what gets off the ground. Two, building activity, which is, of course, hard given continued labour shortages and higher prices, cost materials, etc. And then three, completions.
Do you think there's enough policy support, or does there need to be more? I mean, I know the state government's working, sort of overriding a lot of local council areas at the moment to sort of increase or decrease, I should say, the red tape. What do you make of policy support, and is there more needed?
I mean, certainly that's a step in the right direction, but when we look at, I guess, this fundamental mismatch that we're continuing to see between supply and demand, and of course, this continued deficit that we're seeing in terms of approvals, commencements and completions relative to the federal government's housing targets, it is pretty clear that more needs to be done in terms of being able to fast-track the approvals process, in terms of developers being able to get projects off the ground. So one of the key hurdles at the moment is the feasibility for new developments is quite difficult. So it's much more difficult for developers to move ahead with these projects and get building, given that those feasibility hurdles just simply aren't stacking up at the moment.
Eleanor, always appreciate your time. Thank you so much for joining us on the program today.
Thank you for having me.